simplifying GST for businesses, small or large. And on that note, today we present to you our session on returns under goods and service tax. So just to give you a background, last time in our last session we covered about the basics of goods and service tax, and today we'll be covering about return procedure and how to claim input tax credit at the time of transition. We'll also take up all your queries that may be there with respect to your specific business, and they can be generic too. And we have a diverse range of audience today. Some of you must be having your own businesses. Some of you must be practicing consultants. We may also have certain students who want to know about goods and service tax, and accordingly we can have diverse queries. So, so on that note, we'll just start the presentation. Yeah, so this is what we are trying to present today. We'll be discussing about all the returns that are specified by GST Council on goods and service tax which are required to be filed, and then we'll discuss about the input credit mechanism for the businesses. One of the key consideration that has to be addressed is filing your last return under current regime. So we'll talk about that. So this is the high-level agenda for today's session. Again, we'll start with a basic overview of GST. This particular thing we did last time as well. So we understand that many of you are joining us for the first time. So we'll quickly run through a basic overview of goods and service tax. Then we'll look into all the returns that are required to be filed under goods and service tax, and we'll also look into the timelines for these returns, which all returns are applicable on what all businesses, and what are the timelines, what are the consequences if certain returns are not filed. And then we'll look into the input tax credit mechanism, very high level overview. So we also need to understand that most of these workflows are not yet finalized from GST Council's end. So many rules and notification are yet to come, but whatever is there as part of revised model GST law, we'll try to cover those aspects. And finally, we'll open this forum for questions and answers. You can post your questions in comment box, and we'll keep that thing to the chat box. Yeah, so coming on to overview of goods and service tax for those who have joined for the first time. GST is a comprehensive tax levy on manufacture, sale, and consumption. Now, in a definition, in a nutshell, it is easily said like it's a comprehensive tax. But why is it comprehensive? So we need to break this definition up. This GST is comprehensive because today we have multiple taxes under multiple regions. So we have state level taxes, for example, value added tax or entertainment tax, entry tax, octroi, and we have then central level taxes, which is like excise duty, then customs duty, and services tax. So all these indirect taxes have different regime, and businesses who are under multiple segments, in this sense, like they are dealing in goods and at the same time they are also providing services. They are required to register under multiple tax regions. They are required to comply under multiple tax regions, and this eventually raises their compliance cost. So what GST is coming up is, it is a comprehensive tax, and it is going to subsume a wide range of central and state level taxes. So what these taxes are, like this we have covered in detail in our previous session. So those presentation are still available on SlideShare. You can also visit our Facebook page and access to the Facebook live session that we did last time. Therein also we have covered extensively about basics of goods and service tax. So we'll not go deeper into those domains again, But yeah, coming back to the definition, GST is a comprehensive tax because it is going to subsume a huge range of indirect taxes which are applicable today. And these taxes could be applicable on manufacture, sale, and consumption. So on different type of transactions, same tax would be applicable. That is GST. And this is a national level tax. So irrespective of state boundary or which state you are operating into, GST, you don't have to do state specific compliances. You have to carry out national level compliances at, single place. So that also consolidates your compliance cost and your compliance processes. Next, GST is a tax on goods and services with value addition at each stage. Now, this is again very interesting because the certain taxes that we have today, they don't have the mechanism of value addition at each stage. And this concept is coming directly from what we see in value-added tax or salvage credit that we avail in services tax. So, a taxpayer is required to pay tax on the value which he has added in the value chain. So how it operates is at the time of purchase, a buyer will pay tax, and at the time of supply, he'll collect tax from his buyer, and he's required to pay taxes on the value addition that he has made. So he get credit of what taxes he has paid from the liability which he has to pay to central government. And this is the same concept that we follow today in value-added tax. So GST again on the same lines is a tax on value addition. And GST is going to subsume many state level and central level indirect taxes, and that is the reason why it is a comprehensive tax. So what all these taxes, a high level value-added tax, entry tax, entertainment tax, luxury tax, these are state level taxes. Then we have central excise duty, then certain aspects of custom duty. So basic customs duty will still do its down, but we have additional duty and special duties which are going to get subsumed under goods and service tax. And we have services tax, we have excise duty. All these central levies will get subsumed under goods and service tax. And eventually GST is expected to address the drawback of current indirect tax regime. So what are these drawbacks? One that we can outline for you is the cascading of taxes. We see that manufacturing unit today, when they remove goods from their factory, they are required to pay excise duty. At the same time, when they sell these goods to a dealer, they are required to collect central sales tax or value added tax, and that tax is charged on a value which includes excise duty. So essentially, it is like paying tax on tax. That is what cascading means. Similarly, when we go in a restaurant for the brunch or dinner, we see value-added tax is being charged on a value inclusive of service tax, or vice versa in certain cases. So these kind of scenarios will not arise in under the regime of goods and service tax, and that is how GST is expected to address the drawback of current indirect tax regime. So these are standard slides which we discuss each and every time because we understand that we have new audience joining every time. There are more to the basics of GST, and we have already hosted our presentations on our SlideShare channel, and you can also find the video on Facebook, and we'll also try to stream this session on Facebook Live again. So you can keep following our Facebook page for more information. We also have our GST platform live now, so you can learn about GST through our portal, which is live at cleartax.in/GST. So there we have extensive list of calculators which are coming up. We are also posting guides with respect to impact analysis on certain industries. For example, how your restaurant bill is going to get impacted under the GST regime, how GST is going to affect logistics players, marketplace sellers. When you say so, marketplace is a very new term that we see today. So we have marketplaces such as Amazon, Snapdeal, and Facebook, wherein third-party sellers get themselves registered and do their e-commerce activities. So we have also done impact analysis on such e-commerce sellers. So you can visit all these guides and all these articles and latest updates about goods and service tax on our platform. You can visit our website. And with that, we'll again come back to this presentation and we'll talk about what a return is. So before going deeper into various types of returns that are required, first we need to know what a return is. So we understand that there could be certain chartered accountants or tax practitioners with us today, but then we also have certain businesses who are not well aware or who have not done so far return filing, but under GST it's on a do-it-yourself model, wherein businesses small or large can do their own compliances online. So it is very important to understand the relevance of a return, why it is required, why are they required to file return, why not simply put all the invoices and submit it to government. So return is a mechanism wherein government or tax administration collect all the information with respect to the market and the economy, and it also ensures compliances, like all the compliances, all the transactions that are being carried by the businesses are legal, and whether they have paid their taxes. So it also helps in finalization of tax liability and payment of such tax liability within a period. And at a macro level, all these returns cumulatively enable government to make policy decisions with respect to economy, where they need to fund which all industries they need to introduce subsidies, what all taxes they need to set. So these kind of policy decisions are made on the basis of information which is floated by way of these returns. And these returns also enable tax administration authorities to audit and put a check on tax evasion. So that is the high level importance of returns, why it is required. So you can quickly go through. I'll just give you 1 minute. So, and there's a self-explanatory slide, so you can just go through it. Yeah. So now that we understand what a return is, we'll directly jump into all the types of return that are there in goods and service tax. So under goods and service tax, we have a straight list of 11 returns that are required to be filed by different type of businesses. So not all the returns are applicable on all the business. Certain segment of industry and certain businesses has to file certain returns. So first we'll look into all these returns, like what these returns are. Then we'll discuss like what are the returns applicable for a normal taxpayer, and then what are the returns that are applicable on a composition dealer. So coming back to this slide. So under GST, we have GSTR1, which is the first return, goods and service tax return 1, which essentially contains the details of all the outward supply, all the sales that you have done. So for each tax period, for each month, every business is required to file to upload all the outward supplies that they have made, and this information is required to be filed by 10th of next month. Now, what does that mean? So for the month of April, let's say a business is required to file GSTR1 by 10th of May, which is 10th of next month. So GSTR1 essentially is the sales register of every businesses. Now, one thing which is important is what kind of invoices or what kind of sales you need to file here. So one, all your taxable supplies has to be covered under GSTR1, and also you will also be required to declare all the sales that you have done to an unregistered person, that is your business to consumer transaction, any kind of debit or credit note that you have received on your supplies, any kind of zero rated. So government may specify certain goods or services as zero rated, basically all basic necessity goods. So you also are required to declare all your zero rated supplies, all your exempted supplies, all your non-GST supplies, any kind of exports, and any kind of advance that you have received in for future supplies. So that essentially is your GSTR1. And now again, we are getting queries that the businesses today are scared that they are required to file 3 returns every month. As a normal, as a if you go on this particular slide, we see that these are the 4 returns which every business has to file every month. Now businesses today are very much scared. Like today, they are required to file a single return under VAT, or in case of services tax, this could be once in a 6 months. So again, when they are required to file 3 returns a month, it also increases the compliance cost. But here we would like to inform our viewers that essentially under goods and service tax, all the businesses are filing only GSTR 1, GSTR 2, which talks about the inward supplies, that is the purchases of a business, is getting auto-populated from counterparty GSTR 1, that is from our supplier. So when our suppliers file GSTR 1, all that information will get auto-populated in our GSTR 2. And GSTR 3 is a summary of GSTR 1 and GSTR 2, and it also computes the final tax liability or any kind of adjustment with electronic credit ledger or cash ledger. So that is again an auto population basis GSTR 1 and GSTR 2. So coming back to our first slide. So GSTR 1 is your outward supplies, all your sales gets included. GSTR 2 is your inward supplies. So again, there could be scenarios that your supplier has missed on certain transactions, or certain of your purchases are coming from outside India, let's say. So any kind of import that you are doing, so you will pay IGST on the transaction, and your supplier may not be filing GSTR because he's not registered under goods and service tax, being a case of import. So in such kind of cases wherein your invoice from supplier is not getting uploaded, in those scenarios only a business is required to upload or modify GSTR 2. Also, there could be scenarios wherein there's a mismatch in information. For example, the taxable value or the invoice value uh, is not matching. So you can do those kind of modification in your GSTR 2. And once you have confirmed on all the information that is filed by your supplier, you can confirm your GSTR 2. And now again, GSTR 2 is required to be filed by 15th of next month. So if we talk about for the month of April, then by 15th of May you are required to file your GSTR 2. And eventually GSTR 3, which essentially is your payment of tax liability under GST. You need to reconcile your GSTR 1, GSTR 2, and finally basis GSTR 3, you are required to pay your taxes by 20th of next month. So essentially, these are the 3 returns that will be that will have most interface with businesses, and like a regular business are required to file these 3 returns on a monthly basis. And then again, there is a provision of annual return. What that return is, we'll talk in detail when we go forward. But next we have GSTR 4, which is for composition supplier. So we have seen the concept of composition dealer in value added tax. So same concept has been introduced in goods and service tax also. And here the limit is that at the threshold is that at rupees 50 lakh. So all the businesses whose turnover is below 50 lakh, they can opt for composition scheme. And one thing which is very very important is in a year you have this option only once. So at the beginning of year, if you have opted for composition scheme, you cannot roll back to a taxpayer under a normal scheme for that particular year. So care should be given in such scenario. So GSTR 4 is quarterly return. So composition dealer is required to file return on quarterly basis, and and this return has to be filed by 18th of next month. So essentially, composition supplier is required to file 4 returns in a year, one for each quarter, and then eventually another return which is like annual return, which is a consolidation of all these returns. Next we have GSTR 5. So again, under goods and service tax, we have multiple type of taxpayers or taxable person. So one can be a normal business or registered under normal scheme. Then we have businesses registered under composition scheme. Similarly, we may have certain non-resident taxable person who do not reside in India but who are supplying into India and thus required to get their registration done under GST. So such type of businesses or such type of taxable person are required to file GSTR file. Now, this return there could be a different scenario. So, government has has addressed two scenarios here, wherein one when the supplier is engaged in continuous business, such kind of suppliers are required to file GSTR files every month, uh, within 21 days from such supply. And in case if it is a one-time transaction wherein a contract has been entered into and the supplies have been made and like a casual registration was obtained, in such scenarios, the non-resident person has to file return within 7 days of validity of registration. Like for example, the day when the registration ceases to exist, foreign taxable person has to file 7 days before such day. So that is GSTR 5. Next we have GSTR 6. So this is coming from services tax that we see today. In services tax, we have a concept of input service provider or input tax distribution, wherein head office consumes certain set of services and distributes the input of such services onto different branches and different units. So the same concept has been introduced in goods and service tax also. Here, a person who register himself as an input service distributor is required to file GSTR 6, and it should include all the input credit that is distributed to various branches and various units. And this return is required to be filed by 13th of next month. So that's the timeline for GSTR 6. Again, this is applicable on large businesses who have registered themselves as a input service distributor. Also, another new concept that is being introduced under goods and service tax is tax deduction at source and tax collection at source. So when we talk about tax deduction at source, so as of now, the law specifies that certain transactions and certain persons would be required to deduct tax at source. Now, as of now, the rules have not been specified on what all these entities or what all these persons would be and what all transaction would be under the preview. So mostly this will be like one-time contract and any other transaction which the government want to control. So under these kind of scenarios, once notified, every person who is responsible to deduct tax at source is required to file GSTR 7 by 10th of next month. So, so as I said that we still don't have the list of businesses and the list of transactions on which tax deduction at source would be applicable. So once it is made available by the government, definitely we'll post our guide on it, and you can access that guide through our portal. Next, we have GSTR 8. Now, this is a very interesting concept which has been introduced under goods and service tax, and this is majorly applicable on e-commerce operator. So when we talk about e-commerce or electronic commerce, so this segment has been unregulated largely. We have seen that there is no specific law governing electronic commerce in India, but GST is trying to address that loophole for the government. And on that note, GST Council has introduced GSTR 8, where e-commerce operators. So again, these operators could be like individuals who are maintaining their own platform and carrying out e-commerce activities, or large marketplaces such as Amazon, Flipkart, wherein multiple sellers are registered and they are directly selling it to customers. So these kind of e-commerce operators are required to collect tax at source, in the sense at the time of making payment to the supplier, they are required to deduct a certain percentage of tax and deposit it with government. So this will also ensure compliance from seller's perspective, because seller will get his credit only when he files his return and claims the input of such tax which is deposited by e-commerce operator on his behalf. So e-commerce operator are required to file this return by 10th of next month, subsequent month, and this is this return, the sellers will get their input credit once they file their GSTR1. So having said that, these are like at large, these are the returns that are applicable on businesses. Then we have certain list of returns which are annual in nature. So we have GSTR 9, which is annual return and which is like consolidation of your monthly or quarterly return. So in case of regular business, we are filing a consolidated GSTR 3 every month. In case of composition dealer, we are filing GSTR 4 on quarterly basis. So GSTR 9 is nothing but a consolidation of all these entries. And to add on that, there could be certain scenarios or certain transactions wherein certain transaction or certain invoice has missed to be filed under goods and service tax. So all these kind of modification can be done in annual return, subject to some timeline that all this modification has to happen before September of next financial year, and the return has to be filed before 31st of December of next financial year. Now what this timeline mean is for the year 2017-18, let's say from April 2017 to March 2018, for this particular tax period, annual return has to be filed before 31st December 2018. So that is the timeline for annual return. So GSTR 9 is for regular businesses, GSTR 9A is for dealers registered under composition scheme. And next we have GSTR 10. So GSTR 10 is a final return. Now what that means is there are businesses who will opt for cancellation of their registration under goods and service tax. And this can be because they obtain registration for a specific event, or maybe GST, like the goods they are dealing into, other services that they are providing, GST may not be applicable on such transaction, and thus they are opting for cancellation of their registration. And in such cases, businesses are required to file their GSTR 10, which is their final return under goods and service tax. And this return has to be filed within 3 months of the date of cancellation or the order for cancellation, whichever is later. So within a period of 3 months, this return has to be filed, and that will close GST for you. And finally, also we have certain kind of entities which are exempted from tax. So for example, foreign embassies that we have, they enjoy the benefit of tax exemption, as in taxes are not applicable to them. And so any kind of supplies that are made to such units, they has to be exempt. And on that note, GSTR 11 has been introduced, wherein such entities which have obtained unique identification number under goods and service tax has to file GSTR 11 by 28th of next month with the GSTM. So here we have covered the what all returns we have. Next, we'll look into what are the returns applicable on regular business and composition dealer. So a regular business has not to worry for all the 11 returns. The 4 returns which will interface with a regular business is your GSTR 1, GSTR 2, GSTR 3, and GSTR 9. We have already understood what all these returns are. Here we'll discuss the mechanism. So like again, I will reiterate that businesses are not required to worry for multiple returns that they are required to file. Essentially, these returns are auto-populated, and they are taking input from counterparty returns. So all you need to worry is to file your GSTR 1 in time, and to ensure that all your purchases are included in GSTR 2, which is counterparty GSTR 1. And there can be scenarios wherein certain transactions are missed. So again, you can put all those transactions up you can modify amount, you can modify taxable amount in counterparty GSTR2, and again your supplier will get a notification of this modification, and he will be required, and he can accept or reject, and basis his action you will get your credit. And finally, GSTR3 is a consolidation of GSTR1 and GSTR2 and determination of your tax liability. Now, there are some few concepts which we are not discussing in details today, but I'll just take it up. Maybe in our future series we'll take those points as well. So one is the concept of compliance rating. So every business under goods and service tax will have a compliance rating given by GSTN on the basis of your level of compliances, and that will again give insights to the buyer. Like every buyer under GST regime will definitely opt for a supplier who's highly compliant, because that will ensure his input credit on time. So again, filing all these returns within timeline is very important. And on that note, businesses have already started to adopt such platforms or such technologies. In case if you have existing ERPs, ERP companies are now developing a separate reporting mechanism for GST. At ClearTax, we are also coming up with our own platform wherein our platform can be stitched to your existing ERP, or you can use our platform as a standalone functionality for all the GST compliance, and make sure that you maintain a high rating and you don't lose your buyers. So these are the returns for the compounding tax year. GSTR4 we have already discussed, and then we have GSTR 9A. So 9 is for regular business and 9A is for compounding taxable person. Again, the timeline is same, and GSTR 9A is auto population of all the GSTR forms that have been filed, and you can definitely add more records in terms of any invoice which is being missed. So these are all the returns that are there in goods and service tax. Apart from this, we also have certain returns for claiming input tax credit, which is giving term as ITC. So, but again, much clarification has not come from government, so that is the reason we are not covering all those returns here. Once more rules are specified, more workflows of these returns are specified, we'll definitely come up with guides and webinars on it. But today, understanding having a high level understanding of all these returns under GST is also critical. So that is what our agenda is. So any kind of queries on return filing, I see in the chat box that we have many queries. So we can like break it up here in this sense, like we can go through all these queries, and then we'll look into the input tax credit mechanism. So okay, so we have our team here who are like continuously answering all the questions, and we see we have queries coming from multiple people. So one query that I would like to take is, I see that most of the queries has already been answered. So we have this query from Jigar Shah. 1A and 2A, do we have to upload that as well? Well, Jigar, actually we didn't cover those things because 1A and 2A is, so when your supplier files his GSTR1, that becomes GSTR2A for you, in the sense that these are like counterparty returns. You can accept and reject all these transactions in your GSTR2A, and on final confirmation this will become your GSTR2. So that essentially we didn't cover because these are like counterparties. GSTR1 is essentially GSTR2A for the buyer. Similarly, GSTR2 is GSTR1A for the supplier. So that is how it works. So GSTR 1A and 2A are nothing but counterparty returns. GSTR 1 becomes GSTR 2A for the buyer, and GSTR 1A is GSTR 2 of supplier. Um, I hope that answers. We'll also take further queries. So yeah. So again, from Jigar Shah coming another very interesting and very important query. Do we have to give invoice-wise details or line item-wise details in GST or one? So Jigar, as I said, that we are also developing a platform for goods and service tax filing, and on that note, we are working with GSTN, which is the IT backbone for GST implementation in our country. So there we have seen, like when we are doing all this modulation, we have find that government has enabled line level as well as invoice level detail modification. So there could be scenarios, and I would like to give an example also, so that will bring more clarification. So let's say that your supplier has filed his return under single HSN. For example, he has only single line item wherein he has consolidated 3-4 items, whereas you have been maintaining record on a breakup basis. So there could be mismatch in the terms. There is one line item in your supplier, and then there are 4 line items in your GSTR2. So to address all these kind of scenarios, we have line level item modification also. So I hope that answers your query. And we have to wait to go to have this much of deeper insight. We have to wait for government to come up with all the rules and all the logics that they are going to build. So this is still under testing mode. And as I said, that all these are also going to address in our GST platform also. So you can subscribe to our newsletter, and we'll keep you posted on all the developments that are happening. And yes, so again another question from Jigar: can a service provider opt for composition scheme? Well, initially the scheme, the contention was as such to include service provider as such, but then revised GST law has kept all the service provider out of composition scheme. So we have still not received any strong reasoning behind doing that, but service provider as of now are not under composition. I'll scroll down. So again, I mean, Mr. Jigar Shah is very active, and we appreciate such participation. This actually is motivating us that we have some very honest queries coming in. So the question is GSTR in GSTR2, what is the difference in column ITC available in the month and ITC availed in the month? So again, going this much deeper, I'll take this question up, but I would just like to give emphasis that a taxpayer or businesses has not to worry with respect to how they are inputting, because essentially they are filing GSTR1 and all the data is auto-populated. Now when we talk about ITC available and ITC availed, so input tax credit under GST region will be initially provided on a provisional basis. Provisional basis in the sense, as soon as you file your return, you'll get your credit, and when your matching is done, matching in the sense when, for example, your supplier has filed his GSTR1 and you that comes to you as a GSTR2A when you confirm. So as soon as he files his GSTR1, he'll get a provisional credit. But when you confirm and when you do a matching, a reconciliation is done, then only that credit is actually available. In case you make any modification, then such a credit which is being claimed by counterparty supplier, that will have to be paid back to the government. So that is why these columns are introduced. Now the functionality or logic behind these columns, you don't have to worry, because all this information will be auto-populated. So that logic will build in background, like what all has to come as available and what all has to come as availed. That will also depend on the matching concept of your counterparty transaction. But essentially, we just have to take care that initially we'll get provisional credit, and once we have the matching done, this credit will become actual credit. Do we have more query here? Okay. Okay, so another one from Jigar Shah. So will aggregator like Uber, Ola be covered under e-commerce operator? Definitely yes. So and that is the reason why we see uh, as I mean, so many representation from these aggregators. So aggregator has been defined under GST law. So that is what I was referring to. That e-commerce has not been covered anywhere so far, but GST is trying to address this for the first time, and that is why these definitions have been included under GST law. And if you go by the definition of an aggregator, Uber, Ola, and all these marketplaces who are carrying out activities on a brand name basis, they will definitely be required to collect tax at source and file their GST. We have another query from Ashvita Shetty, and which says e-commerce operator will be required to file GSTR 1, 2, 3, and 8. Well, operator, yes, as an operator, you are required to file GSTR 1, 2, 3, and 8. And uh, but as I said that essentially GSTR 2 and GSTR 3, a major piece of this return will be auto-populated, and all you need to ensure is the reconciliation part, whether all your purchases matches with the counterparty sales, and likewise for your sales as well. So these four returns are required, and over and above to this, GSTR 9 will also be required to be filed on an annual basis. So Ashwita, I hope I answer your query. Let's see what do we have next. Okay, so yeah, do we have more ones of queries? I think this we have taken. We have one from APC. No quarterly return to be filed by non-composite dealer. Well, non-composite dealer, we have like if you are a non-composition dealer, that means you are a regular dealer, and under such case you are required to file return monthly. So the benefit of quarterly return filing is only extended to composition dealers. What are the situations? So I understand that we don't have luxury of time. We have a limited time bandwidth. So what I suggest is we'll take all these queries, or we'll answer all your queries in this particular sheet that you see. And also you can post your additional queries. We understand that there could be certain queries which you couldn't ask here. Definitely you can come back to our platform. You can raise your queries there, and we have been organizing FAQs, and we have been answering all these queries. So as of now, we'll just quickly come back to our presentation. We'll continue with the input credit mechanism, and we'll see if we can come back to the sheet. So yeah. So coming back to our presentation, we have discussed about all the returns that are required. Next thing as a business, you should be aware about is how to claim input credit of your existing good, which you are transitioning into the new region, and how can you avail credit between different taxes. In this sense, under GST we have state level GST, we have central level GST, and then we have IGST applicable on interstate transaction. Then and then you'll have credit under three different taxes. So as a business, you should be aware like which all credit you can use against which all taxes, and you can also plan your cash flows and your volumes accordingly. So first talking about input tax credit. So if you go by the law, it says every taxable person registered under GST law is entitled to take credit on self-assessment basis. Now self-assessment basis here means as soon as you file your GSTR1, which is your self-assessment, you'll get provisional credit of input. So that is what we have provided here, provisional basis electronically in a manner prescribed. So manner prescribed is your GSTN. So on that network, every business will have electronic credit ledger, then electronic cash ledger. All your inputs will be coming into your electronic credit ledger, and any kind of tax liability that you need to pay or any kind of refund that you are getting will flow to your electronic cash ledger. So that is high level input tax credit definition. And if you talk about the existing credit, so today you must be having certain credit under VAT law, or maybe under services tax you may have some standard credit. So there are certain conditions which are specified by government to carry forward such credit under GST region. So now what these conditions are? So first, input tax credit must be carried through return. Now this is very important that you are declaring your inventory, you are declaring your stock, but you must ensure that you have declared these inventories under correct HSN and under correct heading. So that will only ensure your carry forward of credit. So one thing is you have to make sure that when you file your last return under current regime, you include all your inventory under proper head and in proper rate. That is first. Second, another condition is given, as in there are chances that certain goods and certain services are exempted or zero rated or not taxable in GST law. If you are carried like a taxpayer or businesses are not required to carry forward any kind of credit on such goods and services. So today you are dealing into certain goods which have taxes applicable under GST. If there's no credit available, you cannot carry forward your credit under GST law. So you have to ensure that whether all your goods and all the services that you have availed are eligible for the credit under GST law. Also, you can that also will help you in planning your closing inventory, in the sense that nobody would like to pay taxes out of their pocket and then charge it on their profit and loss account. So definitely you need to plan your inventory very carefully. If any kind of inventory which is taxable currently but not taxable under GST, you have to make sure that at the closing inventory of such stock should be minimalistic. So that will be inventory planning at your end. And another mechanism that we have under GST is, as I mentioned previously, the concept of electronic credit ledger. So all your credit would be available in your credit ledger, and you can use this credit while debiting for payment of your tax liability. So that is another concept. And any kind of excess credit that you have availed. So there could be chances that you have availed credit on certain inventory which you have not consumed or which you are selling afterwards. So such kind of excess credit will be recovered from GST, from GSTN as arrears of tax. So that is high level transition provisions for goods and existing services. Next we have capital goods. So again, very important. Today we see that under VAT law we have credit available on percentage basis, like 50% of your credit you can avail in current year and 50% you can avail in next year. So likewise, if you have such capital asset on which you have availed partial credit and partial credit you want to carry forward, you must make ensure that you file such information in your VAT return, and once you have filed it correctly, such credit would be available in your electronic credit ledger. Now again, there could be chances that you have carried forward the credit of on capital goods, but under GST regime such credit is not available. So again, such recoveries will be made by the government, and any kind of unavailed credit will be available under the new regime. So that's all on capital goods. So the same concept flows in here, that you have to ensure and you have to be very critical about the last return that you file with respect to your inventory and with respect to your capital assets. Coming back to the input credit utilization, so we saw that the credit will be available in your electronic credit ledger, Now again in this ledger you have multiple categories. In the sense there could be certain transaction that wherein you have paid IGST. In case of intrastate purchases, you must have you will be paying CGST and SGST. So accordingly, there's a flow of these credits. There's a ranking in which you can set off. So first we'll take up IGST. So in case if you have done imports or if you have done interstate purchases and you have IGST credit, so such IGST credit you can first use with IGST. So any kind of interstate sale that you have made, you can use such credit against such transaction. In case you have IGST left, in the sense that you have paid all your IGST liability, still you have IGST input credit, so that you can use for CGST. And even after, if you have any kind of balance, um, you can pay for SGST. I think it's coming as SCGST. This is SGST, not SCGST. So I think you can ignore C. So that is for IGST. So the 1, 2, and 3 that you see here is in terms of ranking. First, and you have to follow this process. You cannot directly set off your IGST credit with CGST if in case you have IGST liability. So you are required to follow this rank. You have to first adjust IGST. If there's any balance left, then you have to adjust your CGST. Even after, if you have any kind of balance, that you can use for SGST. Now coming on to CGST, CGST is Central Goods and Service Tax, which is applicable on intrastate purchases. So if you have any kind of CGST credit, first you must adjust again your outward CGST liability, and any kind of balance which is there, you can set off against IGST. So again, very important to note that CGST credit you cannot use to pay SGST. Similarly, vice versa concept is there for SGST also. If you have SGST input credit, you cannot use this credit to pay CGST. You can use this to pay SGST and then IGST in a proper ranking manner. First, you have to pay against SGST and then IGST. So this will be the mechanism. Any input side credit which is available, definitely rules will be rolled out by government wherein you can claim refund of such excess input credit. And but these rules are yet to be notified, so we are waiting for that. So that essentially is the utilization of input credit, in the sense in how you can avail your transitional input and how you can utilize your input under GST against various taxes. So that's all what we have planned for today from a content perspective or session. This was the boundary for our session, and now we see that we have multiple questions. So we'll spend 10 minutes answering to these queries. And as I mentioned that we have all forums available. So I'll just take all these queries quickly, whatever I can take. And so we'll start taking up all the queries that were left. So we have one coming from Himanshu Kimuka, and it says what happens for the stock language sellers premises, and how the input credit can be claimed in GST. Well, I assume that I have explained that thing. as in certain cases the goods may have excise duty, in certain cases VAT, CST or VAT. Correct. So question is very fair, that how to claim. So the answer is when we are transitioning from current region. So under current region you will file your return under VAT or your CST or your for your excise duty. So you have to claim you have to claim a credit of all the existing goods that you have, and this credit will be transferred in form of a balance in your electronic credit ledger under GST. So that is what the mechanism is. The only way by which you can claim input for your existing good is by filing return and providing correct measure of inventory. Now, next we have a question coming from Arun Thomas regarding TDS. How is it done in GST return, and what if our client do not file correct return? Should we correct it accordingly, or any procedures where the client are made to correct their returns accordingly? Well, Arun, the mechanism is as such that the supplier will file his return, and the buyer will get a counterparty return which he can accept and which he can modify. So if he accepts, that will become the return. If in case any modification or rejection is done, again it goes to the supplier intimating that such changes are done, and then he has the option to either accept or reject. So that is how the mechanism is. The thing that has to be taken care is for all the mismatched transaction, there is no credit available. So that again brings the understanding between the buyer and the seller that they have to ensure that both are providing correct information. What if a supplier fails to pay tax in current month and pays in late next month? Will we lose input credit? Well, Aditya, I think you have left, but for our other audience, the question is, what if supplier fails to pay tax? Well, in that case, your credit is blocked. That is what the provision as of now today, and that is why the concept of compliance rating is also brought in, wherein buyer can review the compliance rating of supplier and accordingly choose, because if the supplier is not compliant, buyer will not get his credit. So in case if supplier misses to pay taxes, buyer will miss his input credit. And next we have a question from Aditya. No, we have from Arun Thomas. How is tax paid under GST regime for buying foreign software products? Should we pay tax under the reverse charge mechanism, and can we claim the input for the same? Well, definitely yes. So when you will be buying from a foreign supplier, the mechanism is yet to be notified, but the concept is as such that apart from basic customs duty, you'll pay IGST, which essentially is your special duty and countervailing duty and surcharges that we are paying today. So that input credit will definitely be available, and government has already specified like all these transactions are under reverse charge and mechanism in services tax. So likewise, it is going to be under GST also, and definitely. So as of now, for customs duty, there is no credit available, but this will be available in form of IGST under the new regime. Now we have another queries which are coming from Jigar Shah. In my view, ITC will not be auto-populated as the details are submitted to GST R1. Well, again, like these are the logics to be built in return. Or the understanding as such say that you can you have the provisional input credit information available, so that should flow. What will flow, what will not flow, like into the nitties and gritties of online returns. Even we are testing our scenarios, and we are we are also carrying out all these logics. So I mean that I think in this particular discussion we would not be able to answer this particular query, but definitely going forward we'll also be doing our product demo. So definitely, Jigar, you can join us in our demonstrations, and that will give you more insight as to what is coming, what is auto-populated, and what has to be done manually. Another question coming from Jigar Shah: will clear tax help in reconciliation? I think that's what I've been reiterating, that we are building our own platform which will talk with the government's portal, and definitely our focus is on reconciliation, because reconciliation is a very critical under GST. So definitely you can subscribe to our newsletter, you can join us in our demos, that will definitely help you gaining insight in all these mechanisms. Next, we have a query from AP saying, what would be the biggest challenge in whole process according to you? Well, AP, this is very subjective question, but we understand that reconciliation is going to be very critical and very cumbersome. Maybe initially over a period of time, businesses will adopt process flows, but as a part of change management, this is going to be a biggest challenge to reconcile all your purchases with counterparty sales and to reconcile all your sales with the counterparty purchases, because the credit mechanism is as such that until and unless both the documents are matched, you will not get credit as a buyer. So there could be multiple challenges with respect to timelines, with respect to adoption of technologies, with respect to the platform that you are using. And at ClearTax, we were the first to introduce do-it-yourself compliance for direct taxes. Again, we are striving this for GST, and we are coming for our own so we are coming for GST platform, and definitely will try to build all these challenges to address. Next, we have one from Jigar. Can you please notify me as soon as the product or demo is ready? Definitely, Jigar. Will let you know for that, and we have your information. So Jigar, like we are done. We are just taking up all the queries. I hope I'm audible now. We have one from Divya. Both TDS, TCS sound similar. Can you explain the difference? Well, Divya, actually, in my opinion as well, TCS under GST is essentially TDS, but government has bifurcated both the two different scenarios, wherein certain transactions, certain contracts, certain type of parties would be required to do TDS and then file this GSTR 7. And then TCS is something which is applicable exclusively to e-commerce operator. So essentially, they are also deducting tax of sellers and then submitting it to government. So for me, it is also a form of TDS only. It is just a naming change, but TDS is something which is the rules for which is yet to be notified. But TCS is applicable on e-commerce operator, and there are separate returns for both of them. So we have a question from Mamta. Which type of will be for software consulting? Well, Mamta, now this is again technical questions in the sense that we need to know. So definitely you can come to our platform. You can raise this query separately because we would like to understand your business. Specifically, there could be chances that you are into package software, wherein as of now that is applicable. There in certain cases services tax is applicable. So we need to understand nitties and gritties, and then only we'll be able to answer this query. And we have a question from Ashok Dave. Can we take this video offline? Definitely we'll be posting this on Facebook. So you can anytime visit our Facebook page and access this video. Reconciliation, we have one from Prasad. Is the reconciliation statement mandatory for all? Well, Prasad, the reconciliation maybe there's a very hairline difference which I would like to bring for you. So there are two scenarios. One wherein counterparty accepts or rejects all the invoices. So that will ensure credit mechanism. Reconciliation is something which is for us internally to maintain a record of all the transactions which our supplier is uploading, and we cannot just blindly accept all the transactions because that will also affect our input credit. So reconciliation is a mechanism which can be built into the platform that you are going to use for your GST compliance, or this is something that you can do outside the system as well. In system we have a reconciliation in form of matching, wherein each party accepts or rejects the transaction. Likewise, you can have your own MIS wherein you are doing a reconciliation for your own business. So I hope that answers. And we have a feedback from Jigar. Now, very important, guys. Like this is our second webinar. We want a feedback from all of you. We understand that GST is a new concept, is a new tax regime. Many things are very new, and like we can work together, we can discuss. You can let us know what all topics you are finding challenging, so that we can put our resources, we can put our study in those direction, and come up with more informative webinars going forward. So please keep your feedback coming. And I would also like to introduce Shukant, who is here, and he's taking care of all our GST outreach to all the chartered accountants and all the businesses who wish to use our platform. So I'll just hand it over to Shukant, who will just close this session for us.
Hi guys, thank you for attending the webinar. It has been very helpful from your side. We have received so many questions, and it was great seeing the enthusiasm and zeal among you about this new tax regime which is going to hit India very soon. Uh, one request from ClearTax, and as a consumer and as a business owner in India, I have from you is that if you can just spread the word, make ClearTax and make this webinar series, make the initiative which we are trying to do more known to the people, then we'd be very glad, and we'd be very glad to have more people like you talking to us, putting your queries to us, and finding out the answers to us. So thank you guys for attending the series. We'll now be concluding the webinar. If you have any more questions, you can just go to cleartax.in/GST, and you can put in your email ID over there, your phone number, and we'll be sure to connect with you. And thank you guys.